Okay, let's try going on a little bit early. And what I'm going to try to do first is see if I can't move over to Ethernet without losing anything. All right, I think I'm live, and I should be live without delay. I had IT here making sure that I am wired in. So let me know if you can hear me. I'll wait for confirmation. Now live. Okay. YouTube says I'm live. Can you guys hear me? Yes, sounds good. Good. So what I did was I had IT come out to the house and actually wire me in to the wall. No Wi-Fi, and disconnected a whole bunch of other devices that were just nonsense on the network. So I should be without delay. Let's see if that works. If not, well, I only have tonight and 3 more nights, and then I'm back in Canada for a while. So let's go with some of the questions here. First one, Canadian here. Your courses helped me pass all 3 CFA levels, subject to highest tax bracket in Canada now. You can't blame me for that. If you come back to Canada, will you have to pay taxes back on all income you made over in Costa Rica? Well, I don't make income in Costa Rica. I make no income within the country of Costa Rica. If I did, I'd have to pay tax here in Costa Rica. All my income comes from outside of Costa Rica. I'm allowed to be in Canada 6 months less a day. So I'm good. I'm then allowed to be in the US 6 months less a day, but I do have to be here at least 6 months plus a day. So no, I will enjoy a developed market for 6 months and a developing market for 6 months. And I will just time it so that during the rainy season or the mosquito-y season, I'll be back in Canada. So no. Is there anything you're looking forward to in the future? In your life, the world in general? Anything I'm looking forward to? A couple of things. I just can't talk about them right now because of certain commitments I have, but a couple of things I'm looking forward to. I don't know. I don't really know if I'm looking forward to anything at all. Every day I think is interesting. I don't know. That's a good question. I don't know that I'm looking forward to anything. I think I'm living the way that I want to live right now. Just sort of onwards and upwards. I am looking forward to building a new business. I'm in the process of it now, and I have some ideas for it. It's exciting when you're thinking about what it could be and what it could look like. So I am looking forward to the challenges of that. You led me to some invaluable books and memos, and I have to say thank you for that. Okay. How much of your course should someone take before they engage in an actual live transaction? I don't know that there is an amount that you should do before you engage in a live transaction. I seem to think, excuse me, I haven't spoken all day, so your voice takes a while to get accustomed to it. It seems to me that you should understand the company you're trading before you trade it, so that if you buy something and it doesn't immediately go up, you don't panic. You don't say, oh my God, I got to get out. That you understand the nature of what it is that you bought, and you understand that there's randomness in the market. And as long as you're buying something you understand, I think you're good. So I don't know that I would say, well, you got to put in 50 hours first. I would say that if you know nothing about semiconductor firms, at least learn something about them first. If you know nothing about electric utilities, at least learn something about them first. You don't have to become an expert, but you should at least learn something. The 2 or 3 big things that drive revenue for any particular company, you should understand it. But beyond that, I think some of the best education that you're going to get is experience. You can only read a book for so long before you have to step out on the road and you actually have to do something and get experience. So don't prepare forever. Just get out there and do it is what I would say. But do it small. Like don't bet everything you have on one stock going up. Make reasonable bets. Step into this slowly. You don't have to jump right into the lake. You can dip your toe in, and then when you get comfortable, move a little further into the lake, right? Out of curiosity, what courses did you teach at university? Initially, I started with entrepreneurship. Because of the nature of the past that I had my own business. Then I went back and did a PhD, and I looked at innovation across the business cycle to determine, under what economic conditions does really radical innovation occur. So once I finished it, it was a fit with the university that, while given your background and given what you've done, that entrepreneurship seems to be a place to be. So I taught in the business school, and I did for a semester in the engineering school, technological entrepreneurship, because I had a lot of research that dealt with patenting. I created a new course for the university. They didn't have one called entrepreneurial finance, which the finance department didn't like, so you had to call it something other than entrepreneurial finance. But it was about there's a difference between how you raise money as a large company and how you raise money as a startup. So it was, heavy on the idea of, what venture capitalists look like and how to manage a business, how to manage a balance sheet on cash instead of on accrual accounting, because all startups are cash-based businesses. I shouldn't say cash-based, but all startups manage cash, not net income. So it's just a different thinking. And then when the last institution I was at was purely finance. Thoughts on Bank of Nova Scotia? You discussed it in one of your applied options videos. Well, the Canadian, I don't know that I have any specific thoughts on Bank of Nova Scotia versus any of the other banks in Canada. It is an oligopoly, really. There isn't banking competition like you have in the US. It's almost impossible, really, to start up a bank that's going to compete with the big six. So they're simply just big. They're money-making machines, and they're big. So I don't know that I have any particular look at Bank of Nova Scotia over any other Canadian bank, but the Canadian banks have always been a staple of almost every investment portfolio that's in Canada. It's the financials and resources. That seems to be the Canadian economy. So I don't know if I can give you a thought on Bank of Nova Scotia, but as for a 25-year-old, I'd say you don't need the banks. For a 55-year-old, I would say, have a good look at the banks. And instead of bonds, have a good look at the bank's preferred shares. You'll get pretty much a comparative yield. But instead of it being called interest, it's now called dividend, which gives you a better after-tax return using the preferred shares than using bonds. No sunrise. Well, sunrise was 12 hours ago. Sunset, which is just behind me here. But it's the rainy season, or the start of the rainy season. So we just had a big thunder and lightning storm travel through. Cloudy. There is no sunset. So that's been taken away from me. I have no sunset. All you just see is the sky get darker. It's just cloudy. So no sunset. I'm glad you touched upon the business cycle. Come on, man. I'm not able to decide between late expansion or slowdown. Any further thoughts? I get that question. And what phase of the business cycle we're in, and your guess is as good as mine. I would say, like I said last time, I think we're in a quantum business cycle where we are in a superposition of being in a contraction, in a slowdown, and in an expansion all at the same time. So pick which one you like. Do you think the weather derivatives market will expand significantly due to climate change? Will more companies and individuals use it as a hedging instrument against volatile weather? I don't know enough about weather derivatives to know how big that market is, but I can see instances where it may be useful depending on what the strike is or what the contract is. So if I were a resort somewhere and my revenue depended upon the lack of significant storms, that whenever there is a storm, there's storm surge and I'm flooded out for 2 weeks and I don't have flood insurance because of where I am anymore, then weather derivatives seem like the natural thing to insure. And I know that insurance companies are canceling fire insurance for certain areas of California, canceling flood insurance depending on where your home is in relation to where the ocean is or where significant rivers or lakes are. So when there's a hole in the market somewhere, innovation comes up and produces something else that maybe these weather derivatives are a substitute to insurance in certain cases, right? It might even be cheaper to have derivatives tied to weather as opposed to have insurance, because insurance you have to do all year round, but weather derivatives might be seasonal. You might only need it certain times of the year. But that's very exotic. I'm not really into the weather derivatives. I think you get more information on that in the CAIA course. I have looked through their syllabus because I was thinking, wow, maybe I might do something on this. I don't know. I haven't really decided yet, but they do cover that. Why did you choose Newmont 40 puts June 73 and not 39 or 38? If the lower the better, as you expect to hold those stocks. Because I don't think I see 40. Newmont has been holding itself fairly well. It is progressing on its plan to cut $2 billion in costs out of its 2 billion. I shouldn't say costs. $1 billion in costs, $1 billion in productivity and cost reductions, or productivity enhancements and output enhancements. And they do have a lot of interest in the mines that they're selling. So I don't know that they see 40. So, I don't mind reaching for the premium at 40. It's not great premium. It's only 73 cents. I mean, it's not great premium, but I'll take it. You are a thoughtful, smart man. Oh, stop it. And I wondered why made you never have kids? Well, circumstance, from day to day, it just, you play this game of life, and I just never landed on that square. That's all. I mean, if life played out differently, maybe. I was never against the idea. Well, when you're in your 20s, you're against the idea. It's like 25. No, I don't think so. But, as you get older, I was never against the idea. But once you get into your 40s, you start thinking, okay, that's kind of behind me now. And now it's most definitely behind me. Just the way life played out. It wasn't a plan. Also, if you ever declare to become a Canadian citizen resident again, will you have to pay tax on income? Only from that point forward. It's not as if they'd say, well, okay, where were you for the last 6 years? How much did you make? And here's what you owe us, because, I'd never go back, right? So it's only from that point forward that I would have to, yes. But I don't have to become a Canadian citizen again. Well, first of all, I'm always a Canadian citizen. I don't have to become a Canadian resident again. I think when I'm done here, I would find a nice U.S. state to move to that would suit my lifestyle, like Colorado. I think just to ski every, or the possibility of skiing. I don't know if it's every day, but some beautiful mountains out there. I think I'd go there, and then maybe 6 months less a day in Canada and 6 months plus a day in Colorado. I don't know. I don't know. The world is wide open right now. Thoughts on relationships? Oh, I have no negative. I have nothing negative to say about relationships. I think, having seen a lot of them, not myself, but from the outside looking in, I can tell you they're all, none of them are without their challenges. They are difficult. They are work, from what I've seen. They are heartbreaking at times, more so than not. They end badly. Otherwise, they'd never end, but they usually end badly. I think I've seen more unhappy relationships than happy. The ones that are truly happy are each other's best friend. And I think you have to be that at some point in time, that if the other person is not your best friend, the other things fade. They all fade away. The physical stuff fades away. But if you're not each other's best friend, then what's the point, right? So those are the ones, the few that I've seen really work out. That's usually been the case. With the others, I don't know. It just some of them just seem like a hell of a lot of work and a lot more problem than anything else. But I have nothing against them. Nothing against them at all. IB has two views about IV, daily and annual. Why do we always use annual IV? Is daily IV any daily? Annual gives me an idea. Like, annual is easy to conceive of, right? And daily is just a mathematical result of what annual is. It's just, I'm not that short-term focused that I need daily volatility. So annual is good enough for me for what I need to do. I don't know that there's any incremental information on daily that I would say, oh, give me that number. No, I imagine if I were more short-term focused, I'd be more interested in that. Example, you make 5 million. Same question. 5 million Canadian over 5 years. You will owe on that? No. This is including income, capital gains, and interest. No. If I'm not a Canadian resident, no. They cannot go backwards and say, well, while you were gone, you made this. No. What do you think about UK ISA? Do you think it will actually help correct FTSE 100 underperform? I know nothing about other markets. I can't help you on that one. I really focus on U.S. market. I'm not even big on Canadian markets. I couldn't even tell you where the TSX is at all. So no, I don't have an answer for that. How would you recommend to go about learning a new company or sector? Start with the 10K. Go right to the company's investor relations site. There are they aggregate a lot of data for you in the investor presentations, because they do. All companies show up at different investor conferences, and if they present any kind of slide presentation at an investor conference, it can't be secret. They got to let everybody know, so they post it to their website. You can get a lot of information there. The 10Qs are really just financially based, and they're not audited. Go to the 10K. The 10K gives you a lot of information about what the company is, what it does. Your first job is to figure out, how does this company make money, right? And sometimes it's easy to figure out how they make money. Well, they sell this. Other times the business model is not so clear. You got to say, well, exactly how does this company make money? And then you got to figure out, well, what are the drivers of its performance? And there's usually 1, 2, maybe 3 big drivers of revenue. And then you determine whether those drivers are in place. Ask whether or not you like management. And then you just you go from there. But without understanding the industry, without understanding the company, it's hard to determine if it's a good investment. It might be a good company, and you may love the product, but it may be in an industry that's under pressure, and the company may be overvalued in an industry that's under pressure. So it's, I can like the company and I can like management and I can like the product, but management aren't miracle workers. There is this industry that they live within, and the industry is sort of under pressure right now. So, I think you do have to have a good, firm understanding of that. I bought a Canadian stock on IBKR and received a negative CAD position. Yep. If you're US, you would receive a negative Canadian dollar position because you didn't convert any of your currency to Canadian dollars first. So you're long a Canadian stock, which is listed in Canadian dollars, and you're short Canadian. So you're hedged on the currency right now. The problem is that negative Canadian balance is going to cost you interest. You're going to have to pay interest on that negative Canadian balance. I don't want to be short CAD. Should I convert to US? Well, what you should do is sell some of your US and buy Canadian to the equivalent of what your position is. And if you do that, then you are now long the Canadian stock and long the Canadian dollar. If you did that. I keep it open until I sell the Canadian stock. The other thing is you could just keep US dollars equivalent to the Canadian short. IBKR will pay you interest on the Canadian dollars, interest on the US dollars, but you have to pay interest on the Canadian dollars. So the carries will offset each other to some degree. And then you still have no currency risk. You still remove the currency risk because you're short the Canadian, but long the Canadian within the stock. If you sell your Canadian, your US and buy the Canadian, you won't be charged an interest rate on your short Canadian balance, but you won't earn an interest rate on your US dollar balance. So you give those up, and then now you're accepting currency risk. So, you can sort of decide what it is that you want to do, but you will be charged a Canadian interest rate. The company's debt profile is unproblematic if its maturity schedule and coverage are favorable, say 200% debt equity, but interest coverage at 4x. Or at above peer group average. Well, when you say interest coverage, what's your numerator? Your numerator should be EBIT, right? So if they have an EBIT interest coverage ratio, or even better, CFO, cash flow from operations, and if you got to put it in context, when you say 200% debt to equity, that means you have $66 in debt for every $33 in equity. What kind of company is it, right? What kind of company is it? And how is it investment grade or is it high yield? What kind of maturity schedule do you have? If the maturity schedule is 2027, 2028, I think you're okay. Does management acknowledge that they have a debt problem? If you have 4 times coverage and you have, let's say, debt to EBITDA under 2.5, if you're investment graded, it probably isn't a problem. Debt is not a bad thing when used by companies. It can become bad, but it's not necessarily a bad thing. In fact, no debt, I would say, is probably a bad thing, because debt can actually reduce the cost of capital and increase the present value of all the free cash flow. You can change your capital structure by issuing debt to buy back equity. and actually raise the valuation of your firm by lowering the cost of capital. So the judicious use of debt is a good thing, and it depends on what the business is. If it's a utility, debt is not really that much of a problem because the utility is guaranteed a certain weighted average cost of capital, a certain return on their equity based on whatever weighted average cost of capital are. Some of that capital goes to debt holders, the rest of it goes to equity holders, but the equity holders would still be getting a return on equity that is guaranteed. So it comes down to what is the business, not necessarily just the debt level, but what is the business that it's involved in. And if it's a high yield company, it would seem to me that if you have this kind of interest coverage ratio, that maybe management should be looking at paring down its debt to move into investment grade. That would raise the value of the company as a whole, but it's just not enough information at 200% debt equity. AMD is 160. Call options May 31st showing break-even price from 167 to 170. May 31st is tight. Why buy a call option with a break-even of 175 instead of 167? Call options, 160 call options for May 31st showing break-even prices from 167 to 175. Well, that doesn't help me. Like, are you looking at 160 calls? I mean, you could be looking at a 174 call that cost you $1, or you could be looking at a 160 call that cost you $7. I don't know what you're looking at, but you'd buy a call with a break even of 175 if the call option was cheap, right? It's not enough information for me to go on. If you can meet and interview any major figure from the history of financial markets, dead or alive, who would it be? I don't know that interviewing a dead person would be very useful. They wouldn't be able to say much. Who would it be? I don't know that there's any one individual that stands so much above anybody else that seemed to have it all figured out that I would think that that's the one that I would want to talk to. Probably the Hunt brothers, because not because they were successful, but they were so close. They attempted to corner the silver market and almost got away with it. Almost were able to do it. I'd sort of want to talk to them about, what did you see that made you think you could pull that off? What were the conditions at that time? I mean, it's kind of impossible to do that now with position limits per trader. But that to me seems like an exciting story. But to listen to somebody who, had a good track record, well, lots of people have a good track record and that follow different styles. I don't know that there'd be much I could get out of that. Jesse Livermore, maybe, I think would be interesting. He made it and lost it several times in his career. I think he died pretty much broke, but he'd be interesting to talk to. Is, what happened at the top? Did you just think that you were so good that you could never be wrong? That usually is what creeps in. Indian election results on the 4th of June. I want to buy call options. I think the current government will get bigger mandate than before. Current pricing of Nifty 50 is 23,000, all-time high. I think it will cross 24. Okay, so that's your thesis. Options are expensive, as they would be. You're not the only one looking at that. Should I go for a little bit out of the money? 23.2. The price is 335. IV is 24. Delta 0.43. Theta negative 17. Decay 16. Vega. Well, none of that other stuff is important. You're making a directional bet. So because you're making a directional bet, if the market does not go up, none of that other stuff is going to help you. Forget about that other stuff. It's the cost. You'll lose. The most you can lose is 335. If the market doesn't go in your favor, you'll lose 335. But what is the market pricing in? That's what you have to ask yourself. And if your bet is that, well, they'll get a bigger mandate than before, if they have a majority mandate, if they have, let's say they need, I don't know anything about the Indian Parliament system or how it works, but let's say they need, 300 members to have a majority. What does it matter if they have 340 or 350? More of a majority doesn't change anything. It's the fact of a majority. Where elections are useful, or betting on elections are useful, is when it could be close, that they don't have a clear mandate across the board, and you think they will. That the belief is, it'll be split, but that you believe it won't. And is it going to be positive for the markets? That's the other thing to look at. But I'm not going to question your thesis. You have a belief. We're at 23,000. You think it's going to 24,000. What you can do is you could say, well, the 23.2 is 335. What's the 23.6? So you could do a spread. You could say, well, instead of risking that much, because you buy it at 23.2, your break even is 23.535. Can you lower your cost and still get a decent return by turning it into a spread instead of just buying the call? Buy the call and go a little higher and sell a call. Or what you can do is you could buy the call. If the market goes up, you can then sell a call higher to turn it into a really low cost spread and lower your risk. If the market drops, volatility will increase. You can go even deeper and you can sell a put to try to cover off the cost of the call that you bought. So go ahead and buy the call, and then let the market determine what your next move would be. You can do it that way. Where do we leave off here? Is there a specific reason why there isn't a column in IB where we can see the break-even price for each call and put option? Couldn't you just calculate that? Couldn't you say $46, the call is 19 cents, 46.19? A put, $45, the put 73 cents, the break-even is 42.20, 42.23, 42.27. Couldn't you just add it in your head? I mean, I don't know why you would need a column. Couldn't you just add it? Explain your position on NEE 7250 put for July. Florida's probably had the largest increase in population of any state. They've had migration in. So more people use the utilities. Florida's split between two big companies, Duke Energy and NextEra. You're going to need, and I think it's the same with most utilities. You're going to need increases in the asset base. NextEra already has some approval for additions of assets going forward, so they're already past that regulatory hurdle on that respect. So it is a utility like any other utility. Just it does not have a shrinking population base. It does not have a really dispersed population base. Florida's rather concentrated. So it just, it's the largest utility. I think it's well run. It just makes sense to me. It's a nice, safe play to make. I don't mind if it got put to me. I don't mind owning it. So, I looked at the premiums. I looked at the break evens. I wanted to get a little bit more aggressive on this one. So I chose the 7250s. It had a good day on Friday. You can't argue with the day it had on Friday. It was beautiful. Thoughts on investing in India over SPY or tech? I don't know a lot about India. I think India has a good run. The economy, I think, has a good run in front of it. Whether that's fully priced into markets at this point, I don't really follow that market, but I think that it's going to be the beneficiary of a lot of anti-China trade. India is going to have to invest in a lot of infrastructure first to make it desirable for foreign direct investment. More roads, more highways, more ports, more bridges, things like that, so that you can travel the subcontinent a little bit better. So I think as far as investment goes, it has a bright future. How that translates into its valuation on the market, I don't know. In the short term, I don't know. But if I had to pick a country for outperformance, or let's say I had to pick countries that would be in the top 25% of economies, India would be in the top 25%. The US would be in the top 25%, I think. But India would be there. There's an idiom on how it takes 10,000 hours to master a skill. On average, 10,000 hours is, by the way, it's 5 years. That's where you get the 10,000 hours. It takes 5 years. For an average retail trader, is this true? In a market, like a couple of sectors in a market, yeah, you can do that. If you want to be a great mining investor, it would probably take 5 years of research in the space and learning in the space, that after 5 years in the mining sector, you pretty much know it. In all sectors, no, I don't think so. I mean, there are some corners of the market I know nothing about. There are some types of companies I would never play in, simply because I know nothing about them. And there are some things that come along that I'm skeptical about, highly skeptical. The whole crypto space, I'm highly skeptical about that. So no, I find myself still learning. But if you give me one space to play in, one industry to play in, yeah, I think you can become a very good expert in 5 years. It also depends on the quality of your learning. Being somewhere for 5 years doesn't necessarily mean that you're going to become an expert. What it says is that if you're willing to put in the time, and you are actually putting in quality time, and you do something for 5 years, you're going to be an expert at it. But simply showing up somewhere for 5 years doesn't mean you're an expert at it. Right? That's not what it means. It means that you've actually seriously put in the time, and that you've learned, and that you've grown, and that you've progressed, and that you seek out new learnings and new experiences. You actually have to push yourself. You actually have to create the very future that you dream of, because only you can do that. It doesn't just happen to you. So I think one of the worst things that happened over the last 10 or 15 years is awards for showing up. Everybody gets a trophy just for showing up. I think that downplays the idea of what you actually need to do to become an expert. You got to do the work. That's what it means. It doesn't just mean, look, I've been here for 10,000 hours, I'm an expert. Not if you didn't learn anything. So yeah, I do believe that, but you got to focus. There's no way you're going to know it all. There's too many things to know. You're just never going to know it all. Every day you're going to learn something new about, well, what's this now? What's that thing? What's this spread? Never heard of this before. What's that? What market are you like? I mean, there are some days I'll read something and go, what the hell is this now? I've never heard of this before. Been doing this for how long? First time I've heard of this. What is this? And you learn a new thing. So you can't possibly know it all. You got to focus on something. And I think that you can be really great if you focus. So think of this, think of the market not as an undergrad, but as a master's. And in a master's, you tend to focus more on a subject and you go deeper on that subject. So while your undergrad may give you a good idea about the world, your master's says, okay, here's my discipline. I'm going to focus on financials, or I'm going to focus on communications companies, or I'm going to focus on tech in this particular space. And that's all you're going to do. And that's all you're going to know. Yeah, you can become an expert. And there's always an opportunity because companies are either a buy, a sell, or a hold. That means there's always an opportunity. There's either buying the company, selling calls, or selling puts. Every company fits into one of three buckets. So it's never lost time. But focus and actually learn. You got to put in the time. That you have to put in 10,000 hours, not just show up for 10,000. Thoughts on home builders. With all-time high immigration could boost demand for housing. High interest rates and other economic factors might hinder it. Well, this is the dilemma right now. Is our high interest rates keeping home prices high and inventory low? If interest rates were lower, developers would be more willing to build spec homes. Spec homes meaning they build homes for inventory that they have no buyers for, simply because they can get economies of scale by building 60 homes at a time as opposed to building 5 homes at a time. However, it's expensive to carry 60 homes in inventory for 2 years. Super expensive you're not getting 5.5%. Development loans for a large company might be prime plus 200, prime plus 300. You might be 9-10% to carry that inventory. Hugely expensive. I think that the housing stocks aren't really going to see another leg up until interest rates start coming down. I think they're fully priced for the environment that they're in right now. That doesn't mean that they don't have a good long-term outlook. It's just to get there, you're going to have to start to see rates coming down. What are your thoughts on TMF? Too much fun? I don't think there's such a thing as too much fun. TMF, I'm not familiar with all the tickers. You'll have to tell me what TMF is. Are you still in any housing related stocks? Not housing, but Canadian apartment REITs, yes. And not loading up is the wrong word. Well, you could say I'm loading up. I'm willing to add more. New job requires a 14-day holding period for any buys or sells. Other than shorting, would this really change the way you trade? 14-day holding period? Would it change the way I trade? To some degree, yeah. To some degree, it would. It would affect some positions I take. Probably, I'd say about 15%, maybe 10 to 20% of the positions I take would be affected. But I don't know that would be a big deal. I don't know that it would hinder me. For someone like me, it would have to be one hell of a job for me to give up, because I don't need it. But I guess if I were 25 and I had a small account, you're never going to get that account bigger unless you have a contribution plan, and you need a career. You need some job or career in life. That this is something that doesn't necessarily have to be the first and foremost thing you do. There's nothing wrong with 14-day holding periods if you're buying quality. It would just mean that you're not going to do a lot of, short-term stuff. That's perfectly fine. I don't know that would deter me very much. I'm in Colorado. It's very nice here. I was in Colorado once. I liked it. Will there be any new video coming in portfolio construction this fall? Yes, there will. Starting in September, my position reporting is in there, and depending on the market we have, sometimes you need a certain market to show certain things. A market that just goes in one direction, after a while, you've shown everything you can do with one direction. You kind of need something else to happen. So I will be adding to it opportunistically when I see neat little things going on. I'll be adding to it opportunistically. But position reporting will be the big thing. Every Sunday, I'll explain what it is that I'm going to try to do that week, what it is I'm going to buy, or what I'm looking to buy, or the positions I'm looking to take, the price that I'm going to get it at, how I'm going to do it, what my thesis for it is, basically the whole trade plan in advance. And if you've been following me for any period of time, I have a very good track record in picking winners. I'm not so good on my timing, or clearly my grammar, based on that sentence. I'm not so good. Timing isn't my strength. Direction is. Picking winners, I'm pretty good at that. I'm usually early to a trade, though. I'm usually early. But for the most part, I do fairly well. I try to take timing out of it. That's why I don't do a lot of day trading at all, because timing is not really my strength. So I think that can add a lot of value each Sunday, just explaining, what I'm looking at and why I'm looking at it. Sometimes, I have plans to do something and the price just never works for me, that I have a range or a target that I want to get to, and it never gets there. So I'll start the week with, half a dozen ideas, and maybe during the week I'll get 2 of them. That's okay. I don't have to chase anything. The market is big enough that things will come to me if I have patience. Studying for CFA 1, struggling with derivatives. Is your free 2018 content sufficient for 2024? Derivatives has changed a lot. I think the free content for 2020 for 2018 really is there for people who want to learn more about the market but don't necessarily plan on sitting for CFA, or for people who think, well, what's this whole thing about? They can get a taste of how big it is, to get an idea of what's in it and what it's like. But I would strongly recommend using the most current content. It is an exam. It is serious stuff, right? Question regarding the valuation of non-financial stocks. I go for a top-down approach, but confused about valuation. Well, you have to, if they're non-financial, you need some other valuation metric. So there are certain standards, like food companies usually are valued at a multiple of sales, 1.5 or 2 times sales, depending on the type of company. Some industries and some companies in industries are valued at multiples of cash flow. Some are valued at multiples of earnings. It depends on what you're looking at. And what the standard is for that particular industry. And it's on any metric, it's worth looking at what the peers are trading at, if it has peer companies. So if you give me an example, I might be able to give you some insight on it. But I seem to think that valuations based on cash flow matter. Earnings are iffy, because you can always engineer earnings. Cash flow seems to be a more solid number to use, a multiple of cash flow. What do you think of industrial REITs with potential leasing spreads and lease renewals to mark to market? I haven't touched any other REIT other than apartment REITs. That if I were going to be in REITs, it'd be in apartment REITs. Industrial REITs do quite well. I wouldn't be against them, but it just I'm not that interested in getting into the REIT space again. I mean, I spent 10 years there. Well, more than that. I did fairly well, but just it's time for me to move on. So I don't want to get sucked back into that space again. No, I'm not against the industrial REITs. I think if I had to stay away from things, office and retail are the two I'd stay away from. Where do we, sometimes the chat just jumps. There we go. You seem like you live well below your means. What drives you to keep working so hard instead of just enjoying the sunset with a nice companion? There is no sunset. It's the rainy season. If I had a companion to enjoy the sunset with, I'd have to break up with her for 8 months out of the year. That's not fair. No. I don't see it as work. I just don't see it as work. I guess if it was laborious every day, it's like, oh God, I got to do this, and I really, really just want to be on the boat, or I want to go jet skiing, or I want to go spend 2 weeks in Australia. I can do all of that, but it doesn't really excite me. I don't find what I do to be labor. That if I wasn't doing this, I'd end up over time doing something like this. I'd find something to do like this. I just, am in no position to stop. What would I do? It's such a big part of my identity that I would seem to be lost without it. That would be every day an existential crisis of who the hell am I? What am I doing here? What's it all about? I'd be looking to find meaning somewhere else. So it's this is what I do. It's what I do. Let's see. Levered ETFs that write options and pay dividends. You can do it yourself without the management fees. I guess is what I would say is you could find, they're writing options on some ETF. Why not just figure out what ETF they're writing options on and buy the ETF and write your own options and save the management fees? You could do the same thing. What studies do you plan to finance with your donations? They'll be in the finance department. I think I have enough to fund at least 2 good research chairs. A research chair means you're funding it, you're endowing a position so that the university must hire someone because it doesn't cost them anything. You paid for it. That the money you give the university, the return on that money pays the salary of a professor and pays the research budget at the same time so that it's free for the university to have them. In exchange, it's called a research chair, and your name is on the research chair. And that just provides more resources for a university in their finance department. So it would be in finance, I think. I don't know. I haven't really given it a lot of consideration. I guess I should at some point. But I haven't really given it a lot of consideration. I'm still quite young. So, considering buying a house in Canada or keeping down payment for SpyQ, what would you do? I'm 32, no kids, make $450K a year. Well, you don't make 450. You make maybe 280 and the government makes the rest. So you don't really make 450. You're working at least 6 months, 7 months after all your taxes. You're working for the government. You're working for the people for the better part of a year. I don't know how to answer that question. There is some value in owning a home, but there is some cost in owning the home as well. There is nothing but a loss of dollars in terms of paying rent when you could pay rent to yourself. Although interest rates suck right now, if I were to buy a house now, I would be buying a floating rate. I'd be getting a floating rate mortgage for a year or 2 years, and then once the Bank of Canada lowers rates enough, I would then at that point move into a fixed rate. Property values do increase over time, and there is an intrinsic value of living in a house that you get some value, some utility out of the house at the same time. On the other hand, markets in the long run do tend to outperform real estate, especially real estate right now that has had 8-9 years of incredible gains. That doesn't keep going forever. At some point, you're going to revert back to 2-3% gains per year. I don't know. I don't know. A house anchors you, right? A house now. The thing is about a house is if it's your primary residence and you sell it in the future, there is no tax on that capital gain. So it is kind of a neat thing, a tax efficient thing in the future. If you think that over the next couple of years there'll be some capital gain to it. Usually, to overcome transaction costs, you have to own a home for almost 5 years just to overcome the transaction costs. But maybe in a rising price environment, you could get it in 3 years. Are you good at poker? Well, you never answer that question. If a group of people ask you, are you good at poker? Don't say, yeah, damn good. You said, poker, what is that? That's like what, 2 pairs, 3 of a kind, that kind of stuff? Yeah, I've heard of it. I think I played it way back. Why are you playing? See what I mean? I would never admit to being good at it if, in fact, there was a game. Only after the fact would I then have to. What if I lose? Then I never said I was good at it, but if I win, everyone will say, "Oh, you played us." Did I? Or was I just lucky? I don't know. Right? Be humble. But I played the game. What is the purpose of buying the house? Building wealth? If so, maybe not in Canada. Yeah. How do you go about evaluating the management of a company? Usually on value added. So you can look at EVA, economic value added, is what was the value of the company when the current management. Well, it's hard to do that too, because usually there's continuity on management teams, but you can look at it in terms of a CFO, that over time, what was the economic value added? So, a company where you can look at its management and let's say Goodyear Tire is a good example. The CEO was there 24 years and things were great until they weren't. And there's a belief the CEO just stayed too long. Well, now they have a new CEO, so it's a matter of what do you think this guy, like, you have to look at the performance of the company over time. Also, if there is a problem with the company and management doesn't recognize that there's a problem with the company, then that's a problem. If they don't recognize it, I was critical of Mary Barra for a couple of years. She should have sold Cruise when it was all the rage, when it probably could have gotten a $50 billion valuation, more than what GM was worth. Didn't sell it. Should have instituted a buyback long before the stock got to $28, had to get to 28 and back her in a corner before she came out swinging. Shouldn't have done that either. Should have instituted a dividend on the stock when Ford instituted a dividend on theirs, waited a couple of quarters later. So there were a couple of what I thought were missteps, and I thought this person's got to go. And then she pulled out a $10 billion buyback. So it's like, okay, at least you recognize the tools you have and that there's a problem. Okay, welcome back to the fight. Now let's see what you're going to do. Some managements don't recognize a problem even when it's right in front of them. They don't recognize a problem. That's when you can't stay with management. There's nothing wrong with a company with a problem as long as management recognizes what the problem is and has a plan to get out of trouble. It's not having a plan that would be a problem. And then, even if they have a plan, if they just can't seem to execute on the plan, then at some point you got to let them go. When you research a company, do you take notes on iPad or paper? I do. I take notes on paper. I'm old school that way. Take notes on paper, and then I'll go through the notes I have, and anything where I'm uncertain, I then go to another. I have a line that says 1, and I'll have a piece of paper that says 1, and I make notes. I then research that idea. And then I look at that, and if there's something I don't understand there, I'll circle, I'll say 1A. I'll have another piece of paper that says 1A. So it's kind of recursive. And that's the way I keep things straight. And then as I'm going through it, I start crossing things out, saying, okay, I don't need this anymore. I don't need that. And then you pare down your notes they'll expand out to 20, 30 pages. Then you'll expand them down to 10. And then you say, okay, well, that's about right. But you always have to go further than what you need. Last week you said CFAI asked you to take down a video because of a joke. That was back in, it was 2019. Given the orientation of new curriculum, do you think CFA will start to chase people with opinions that differ with the orientation of new curriculum? No, I don't think they'll do that. Do you think CFA will start to chase people with opinions? No, I don't think they'll do that. I don't think they'll get to that place. I think what we're seeing with the wokeness is the tail end of it. Is there are still some people who still feel that playing the victim card or pandering still is worth something today. There's this one commercial on Bloomberg I just can't stand. There's this. It's about this woman who has 4 sports teams now. I don't know if you've seen this. And the interviewer saying, you already had 3 sports teams, and now 4 as a woman. And then she reminds them, also African American. Play that other victim card. And then it's her turn to talk, and she says, the women in the audience will understand. We never get these opportunities, says the billionaire Black woman who already has 3 sports teams. You never get them? At what point do you stop playing the victim card? Like, that would have sold 5-6 years ago, but you listen to it now and it's almost cringy. It's like, you're still playing the victim card as a billionaire with 3 teams? You never get these opportunities? Never? Where'd the 3 come from? Where'd the $1 billion come from? You never get them? I mean, I think you're disproving the very point you're saying based on who you are. So come on. So I do think we're at the end of this nonsense where we just sort of have to, well, we have to agree and nod and yeah. Even though we don't believe it, even though we're saying, oh, give me a break, come on, man. Like, I think we're at the tail end of it. I think CFAI is late on this one. I think they're chasing the bandwagon down the street. I think the ESG certificate was rushed out. I think, in a couple of years, it'll be one of those things they look at and say, well, we got to retire this. No one's really paying attention to this. Is it important? Sure. Is it all important? No. Is it more important than the mission of management, which is to maximize shareholder value? And in maximizing shareholder value, you maximize all value, period. This idea of stakeholder groups, sure, you can think of stakeholder groups, but if you don't satisfy shareholders, you don't have a business. You don't have investment. You don't have capital. There is a hierarchy, like it or not. So ESG, the environment, that's important. Sure it is. Governance has always been important. Social issues, whose social issues? My social issues? Your social issues? Whose lens are we looking at these social issues through? I disagree with taxation for the purpose of distribution. I agree with taxation for the purpose of funding the government, for the purpose of funding the economy. If you want to build roads, if you want to have an army, if you want to have police, if you want to have schools, if you want to have hospitals, I'm okay with that. But when you start taking money away from me just to give it to other people, I disagree with that. So do we teach my social perspective or do we teach yours? Whose? This is the idea behind the S in the ESG is it's nonsense. And people are figuring that out, but it was a bandwagon that went by. And phony progressives have to jump on that bandwagon because it's not inherently who they are. If it was, they'd be driving the truck that's dragging the bandwagon. They wouldn't be jumping on it. CFAI is just jumping on a bandwagon too little, too late, and to the point where it's almost insulting now that you know, it's if you go back to McCarthyism, and you know, the one senator who confronted McCarthy said, "Have you no shame, sir? At long last, have you no shame?" And that was the end of it. That whole Red Scare thing and McCarthy, and that ended with just that statement because that person said what everybody was thinking. At long last, have you no shame? Are you still pounding the drum on this thing? Are you still calling people all these filthy names because they don't agree with your ideology? Are you still shoving your ideology down people's throats with absolutely no evidence to back up anything you're saying? I think we're all just a little sick and tired of it. It's a shame that they're jumping on this bandwagon this late, but this is what happens when you have a business run by committee, right? I don't know how you guys feel about that particular rant, but by the way, while I'm on it, if you really want to equalize society, if you really wanted to equalize society, you would not redistribute wealth, you'd redistribute education. Education is the fastest way out of poverty, bar none, period. Solid evidence for that. Just some people can't afford it. Don't redistribute my wealth, redistribute education. I'll gladly pay for that. But just to take money from me and give it to other people, I disagree with that. All you're doing is increasing the very thing you're trying to solve. So do that. But I don't see any plan like that. Seeking advice on my career path, 40 years old, ACCA, have family to support, considering starting the CFA program, confident in my ability to pass the exams. Okay, so that's a statement. You're seeking advice on your career path. I find that when people ask questions like that, they pretty much know what they want to do. They're looking for some kind of validation. And I would say, you know, I did my PhD at 36. 40 is not old. Just say I'm 40. Don't say 40 years old. I'm 40. And you can become anything you want to. You can. The future is an unwritten tablet. You can do whatever you want. If this is what you want to do, then do it. Going from accounting to finance. Sure. I don't know what to say because I'm not seeing the question when you say I'm seeking advice. I see a statement, but not a question unless you have it written further down. Where should you be for level 1 CFA in November? I've got weakness in quant, economics, portfolio, and ethics, judging by my scores and volume of work so far, 70% in Q. It's November, you're May. I think you're good. You recognize where your weaknesses are. That's the important thing. You know where you're going to put some focus in. It's not like this is October, and you're saying that you recognize it now. That's half the solution right there. Well, more than half the solution right there. So you know where to focus. So you're where you should be. Have you heard of Vincent Khashoggi, the man who cornered the onion futures market? No, I haven't heard of that one. I didn't even know there was an onion futures out there. Look at that. See what I'm learning? I didn't even know there were onion futures. Have you sold any puts recently with such low volatility? Yeah, if you watch the market outlook, you'll see on Thursday when the market took a nice big dump, I took that opportunity to sell puts on a number of companies. When you were at the market close, what do you think moved the market and how to analyze or filter through the noise to news that actually... When you are at the market close, what do you think moved the markets? What day? Why do I have to wait till the close? How to analyze or filter through the noise to news that actually affected it. Oh, okay. I see. You're looking for, this is I think the desire of humans is to make sense of random events because we can't accept randomness. If your day and the interactions you have, think about this for a minute, would be different if you left your house 30 seconds later or 30 seconds earlier. If you got cut off on the way to work that day and you left 30 seconds later, somebody else would have been cut off. We can't handle randomness, so we try to assign meaning to it that the person who cut you off must have something against you. It was personal. They're an asshole. And you're going to tell them. You're going to pull up beside them and wave them the finger. And they're going to go, oh, what's going on? They probably had no idea they cut you off, right? Same with the market. A lot of stuff that happens is random, and we try to make sense of it every day. I don't know that it's useful. I mean, what would be the use of it to say, okay, it was this. Okay, so now let's just say that you can identify this is what caused the sell-off. Well, how's that going to change anything tomorrow? Is it going to happen tomorrow? I don't know, because the event might have been random that caused it to sell off. In which case, you're regressing into trying to explain randomness with some random event and then attempting to forecast the randomness of that event. Know the companies that you want to be invested in. And when the market does this kind of stuff, ask yourself, is this, when you see your company dropping in price, is this company specific and I've changed my mind? Or is this a buying opportunity? Is this my 5% off or 10% off sale that I've been waiting for? And that's the best that you can do. From day to day, this is a highly random process that we're involved in. Attempting to say the market sold because of this or it sold because of this. What about all those days where there are events and the market went up? Only because randomly there happened to be a large fund that was moving into the market that day, and it pushed the market up when the market otherwise would have went down. Well, that's a random event, but you wouldn't know about it. So I don't know that there's a lot of value in trying to assign a reason to it every day. Now, some days are pretty clear where something happens and the market reacts and it's negative all day long. Some days are pretty clear. Other days, we're going along, we're 10, 15 points up. We end the day 30 points down. Why is it down? I don't know. Because it happens. It's, who knows why? It's just a bunch of random events. Onion futures. I'm going to have to look that up. Onion futures. I didn't even know there was such a thing. My teacher described the internet as the great gray ocean, where it is difficult to discern quality. That's true. How do you go about finding good sources of information regarding niche financial topics? You consider the source. Company sources are the best. Associations are pretty good. .orgs are pretty good. Any government data is pretty good. I would avoid things like blogs and opinions. If you read something on Seeking Alpha, I'd read it with a big question mark of, are you even right? Are you even well informed? I've read stuff written by experts before that are full of errors that are easy to tear apart. I've heard commentators speaking, on the podcast tours that these people go on sometimes, and you listen to somebody go, whoa, that's not correct. That you're misunderstanding what this thing is. That's not a correct statement. What was the last one I heard that was rather egregious? And I thought, whoa, you can't say that. I forget now, but it was somewhere, and I was listening and thinking, whoa, hang on, you're missing a big part of the story here. You're just doing the surface thing and saying these hyperbolic things, and it's not true. So somebody writing on Seeking Alpha, I don't know, is it true? Maybe it is, but it's incumbent upon you to verify it. If it were in a company release, in an investor presentation, I'll believe it. If you say, well, this is what we see in the industry, okay, I believe you. I don't think that I have to go and verify it, because you're not going to lie, you're not going to mislead to that extent on something like this. But on Seeking Alpha, somebody says, well, this is going on, so it means this. Does it? And is that really going on? And where did you get that information? So I'd be a lot more skeptical about that. But any government data source, any .org, whether it be in the energy industry, the copper industry, all of them have a .org. All good information. I think that's basically how I would look at it. Wherever you read some Barron's, I think, is pretty good. Wall Street Journal is pretty good. I mean, they fact check. I'd be skeptical about certain, like Forbes, I'd be skeptical about, because it's written from a very ideological perspective. It's written from a very Republican perspective. So whenever they say this is going on and here's the data, I think, yeah, but I'm sure if I went over to CNN, they'd say that that's not true and here's the data. So they're sort of like, the Fox News of business reporting. It's like, well, you're so far one way that I don't really trust what you're saying. You get a feel for who's more neutral and who's not. Over time, you can trust certain sources. If you can't get everything you're looking for from government data sources, the industries.org, and the company's investor relations, and the competitors of that company's investor relations, you might be outsourcing your thinking by saying, well, what does somebody else think about this, without knowing who they are. Where do we leave off here? I upgraded to applied level package today. Do you have any recommendations or pathway to learn effectively, make the most out? No, there is no particular pathway on that one. Explore, jump around. I encourage it. I don't know that there is any one pathway, except in the portfolio construction. I think you'd want to go week by week on that one. But for sector studies, just pick one. Pick anything that you think sounds interesting. Same with options. Just pick strategies that you think sound interesting. I don't really know that there's an order. I didn't design it that way. Any podcasts you listen to follow the markets? Multipolarity, I don't know that one. Not really. I don't listen to a lot of podcasts in that sense. I don't know. I don't really have a lot of patience to sit around and listen to podcasts. With the companies that I follow, I'm registered on. You just register your email with their investor relations. So you get any news release from the company that they put out there. There's already enough out there during the week that I don't know that I have to go looking for podcasts. I don't listen to a lot of them. Maybe I should, but there's not a lot that I listen to. Not because I don't think they know what they're talking about. Just it's the time. There's only so much time in a week, and with everything I got to get done, if you've got 4 or 5 podcasts that are an hour long, these things add up. I just don't think I have the time. Another interesting finance character from history is Ivar Kruger, the match king. He had monopolies on matches and is credited with being the first to issue B shares. And well, look at that. Look what we're learning here. You think the US would follow suit and cut rates if another large economy like the UK cut rates first? No. No, I think the US will do what the US will do. CMHC reports that there will be record levels of purpose-built rentals in 25 and 26. Does this factor into your investment horizon for CAR? What would your expected holding period for the stock? I don't know if I'd be going much past 2026. It's 2024. The rate cutting cycle, I think, is what's needed to bring these higher. And then there will be a point where they will be fairly valued. When we talk about record levels in 2025 and 2026, you have somebody forecasting the future. That may or it may not happen. CMHC has no greater visibility on the future than anyone else has. The last investor presentation from Capri showed almost a decade just to catch up. I mean, you have to build so much just to catch up. So even if you do start building, there's a backlog that's going to be needed first. So there is lots of build out that would be needed, even if there is. And what we've seen so far with all of the government effort to get things built is none of it's really working. Nothing. I mean, you not only do you have multi-decade lows in housing starts, and this is on the back of government saying we've announced this, we've announced this, we've announced this, we've announced this, and you're even lower. So I don't know that any of that stuff really works. As soon as you get a government involved, you can bet against them almost right away. What markets and economic indicators are the most correlated factors to bond futures? Bond futures? Why bond futures? Well, the underlying bond itself, yields, whatever affects yields. So economic indicators, yields. What do you think we should? Do you think we should take some of the economic data that comes from foreign countries with a grain of salt? Depends on what foreign country. Yeah, it depends on what foreign country. Considering a position in Boston properties, well, it is low enough, right? They primarily hold Class A properties in gateway cities. I'm familiar with Boston properties, which there is a shortage of. And if you want to convince workers into the office, I think it will need to be A-rated. Yeah, I have looked at Boston properties. I think if any office REIT can withstand what's happening now, it would be A properties in gateway cities, and that's where Boston property plays. Price is low enough. I think not only are companies issuing their mandates of return to work, but I think there are some jurisdictions, some municipalities that at least last week, I think that I heard have been issuing return to work mandates. The problem with not going to work, with not returning to work, is it takes a considerable amount of revenue out of the city because you need those people in the city spending money in the city. You need them using public transportation to get into the city. It actually has a ripple effect. And when offices are only 50% full, it actually begins to hurt the revenues of the municipality. So having municipalities issue back to work, I don't know how they enforce it. And I'm not even sure if I read it right or if it's for another country other than the US. But having them issue that is sort of a sign about how much it is costing them in that respect. Do you think we should take some of the, okay, I already read that, and I just lost where I was again. Oh, there it was, my teacher described. Let's keep going down. TMF is TLT on steroids. That's probably why I haven't heard of it, because I don't bother with any levered ETFs at all. I get the crypto skepticism. I'm a Ethereum whale. Talk my book here, but ETH has real yield, zero energy overhead, and a shot at becoming the neutral global settlement layer for financial assets. It's somebody who is into crypto. Well, that's great. I mean, if you could make money at it, that's great. It's just not my thing. You saying what you said is like a born again Christian telling me that Jesus Christ is the one true path to salvation. It's like, okay, well, bully for you. Yeah, it's just not my thing at all. I do get the difference between Ethereum and Bitcoin. I mean, I do get the difference. Just it may be my thing one day, but I'm just not on board. Do you believe you can earn excess risk-adjusted returns by simply holding a low-cost index fund and spending your time doing something else? Well, we do have some results on that, and I was going to talk about this on Sunday, and I thought it's too specific. Canada Pension Plan has just recently come out with some results. One of the more controversial things is an admittance that they would have done better over the last how many years had they just bought passive indexes, ETFs that track indexes for all the active management, and CPP was active. For all the active management, they would have done better passively. So if you ask Canada Pension Plan, could they have done better by simply holding low-cost index funds? They'll say, yeah, we're proof. We're proof. The CPP heavily adopted the endowment model, or was it? Yeah, I think it was the endowment model of direct ownership on alternatives and active management. Didn't work out. Hasn't worked out. So yeah, they could have done better. Any positions puts you will look to add on weakness this week? AT&T. I'd love to see another run down to 17 so I can grab some more 17 puts. I've made some good money on 16s and 17s now, a couple of months, 3 months now. I think I didn't have the Mays, but no, not the Mays, sorry, the Aprils. I'd like to get the Junes, but I just don't like the premium in the Junes. AT&T sitting at 17.50. I tried for the 18s at 98 cents. I think it printed 98, but I never got the 98. There wasn't any volume for me. Any weakness on AT&T, I would grab. I was doing them in 100 and 50 and 100 increments. I think if I see 17, if there's some good premium on 17, or even the 18s, if I can grab like $1.10 or $1.20 on any weakness on AT&T, it would have to be significant weakness to knock it below 17. I'd probably do 200 to 300 at a time, because I think the way AT&T is moving, in a couple of months, I'll have to move my strike up to 18 to keep selling puts with premium. I don't know that it'll visit the 17s because it is making good progress on its plans. So yeah, AT&T would be the big one I'd be looking for. What else was I looking to grab this week? I'm probably still going to keep chipping away at the apartment REITs. If I see any weakness on them, I'm going to jump on them. I see Killam's 17 and a half. I see Killam push down to 17, 1690. I think 1690, I would grab quite a bit there. Minto, if it pushes below 1280, I see, not below 12, sorry, 1480, 1470, 1460, I'd probably buy again. Same with InterRent. If I saw 1180, 1170, I'll load up on that. Cap rate, I'll keep going. I'll keep adding Canadian apartment REITs. I don't know if there's anything else that I was trying to get last week that I didn't get. AT&T is the only one that It printed 98, but I never got it. I wish I did, but I didn't get it. That's probably a big conviction one for me is AT&T. I just can't see it getting lower than 17, 16.50, and at a 6.5% dividend yield, I don't mind owning it. And even if it gets put, I can still sell calls against it. I think it's just a nice income factory, a nice money maker. Any plans for adding understanding automobile? It's done. I only have to go through I finished the OEM video, and all I have to do is just go through the 10Ks of GM, Ford, and Tesla. I think I could do Tesla a bit better than what I did. I was sort of rushed to that one. But tomorrow's a holiday in the US, so I'll be narrating those tomorrow. I highlight them yellow, and then I just read certain sections. So it's just a matter of narrating them. But I'm done. You should see it. Well, I'll upload it tomorrow night or Tuesday morning. You should see it Tuesday, depending on how fast IT posts it. But it is done. That one is done. Whole process that you follow to find winners. So I think the easiest way to sum that up is to quote the guy that discovered the laser. He said, "The idea for the laser came to me in a single night, but it took 20 years of research in the field to get to that night. And the breakthrough came at night." How do I find winners? To give you the process, it's based on years of experience. It's based on it's not as if I could take someone who's never seen the market, give them a 5-hour seminar, and off they go picking winners. That doesn't happen. Not in this game. It is years and years of experience to be able to spot opportunities. And there are opportunities everywhere, but you have to be able to find them. If you know nothing about a stock, you can't possibly know if it's an opportunity. The only thing you can know is what you hear somebody else say. And you don't even know if that's true. You just hear somebody else saying something. You say, "Oh, okay, well, somebody said this. I'll go ahead and buy it." But you don't know why you're buying it. You don't know what the catalyst is. You don't know what the reason is at all. So it's research. It's picking up a 10K, anybody's 10K, and starting to read it. And as you're reading through it, you start thinking about the company, you start thinking about the valuation, you start thinking about the market. And the more you know about the industry, the more you know about the competitors, the more you know about how it's affected by interest rates, how it's affected by economic growth, how it's affected by other variables, input costs. It's a whole constellation of things. It's never just one thing, which requires experience and education. And based on a post I put on LinkedIn a while ago, it's education plus experience, endlessly repeated. This is why, I've been thinking about this IM Academy, this scam thing that Bloomberg's been reporting on. And what are they, banned in France now, banned in Spain, I think they're being charged in the EU. They violated SEC laws as well. I mean, it was just a scam. But Bloomberg reports that they were doing about 600 million a year. When I think, I can't get that out of my head. 94% of people lost money that followed this. And basically it was just one big cult thing, that you would join these families, and this group that you would join is considered your family. And you would discuss trading strategies, but that never happened. It was always just motivational sessions. And people were paying this company like $200-300 a month to be part of this. And I guess if I could get them all in a room and just say one thing to them, it doesn't work that way. It is never going to be this easy. where you just simply pay money and somebody gives you a trading signal and you buy and you make money. That shit doesn't work. It doesn't work. It's always going to be a scam, always. That's not how it works. It's years of research and experience. And let me tell you something. The market is full of opportunities. They're everywhere. It's full of there's so many. I couldn't even tell you 90% of the opportunities. But there's always an opportunity somewhere. There's always an opportunity to do something. But if you rely on somebody else to tell you this, you're going to get ripped off all the time. All the time you're going to get ripped off. Because anybody who tells you they can do that for you is lying to you. It is brutally hard to do. And anybody who can do it is never going to sacrifice their integrity by doing shit like that. I feel bad for all these. 94% lost money. And they were this company primarily preyed on minority communities and students. I mean, come on. People with dreams. This is what minorities have. When they come to another country, they have this dream of making it. And they preyed on these people. And it was all about taking as much money from them as they possibly can and handing them coin tosses. Buy this, buy that, buy this. And none of it was real. The only thing that's real is yourself. The only thing that's real is your action. The only thing that's real is what you make of things out of yourself. One of the best quotes I've heard about how to live your life, I think it was Jean-Paul Sartre that said this, is the only thing you have to decide in life is what to do with the things that have been done to you. What you do about the things that have been done to you, right? Don't outsource your thinking. So I guess, it's a long lecture on how do you spot winners. You have to spot winners. Don't rely on anyone else. How I do it is years of experience. And how do you get there? 1 foot in front of the other. 1 foot in front of the other. Have an idea in your life of where you want to go and make it happen. It doesn't happen overnight, but I'll tell you something. If you read a company's 10K and you really dive into it for a week, and then you go to the industry association, you start reading articles, you're going to develop an idea in your head about, hey, wait a minute here. This company's, I don't know if it's going up. This company's not so bad. And the industry's not so bad. I mean, I could probably sell some 20 Delta puts on this just as a test. And then you make a little bit on that and you get a return on your education. That's addicting. Right there, you've discovered the secret of how to find winners. You find them. They're everywhere. They're everywhere. Pick up a 10K. Just start. And you might say, I don't like this company at all, but this was interesting. That this is the input they use. And you go to another company, you say, but they use the same input. And you later on find out, well, hang on, there are very few companies that supply this input. Oh, here we go. So you read about AI, and there's a lot of companies out there. How do you pick a winner? They're all fully valued. You look at the software companies that are doing it, fully valued. Where do you go? But hang on a second. They all use energy, and energy uses copper, right? You slowly trace everything down. So I'm going to be in utilities and I'm going to be in copper. Go ahead. Explore all the AI you want. You're going to fail. You're going to fail. You're going to fail. You'll overbuild capacity, but these guys are going to win. That's experience over time. You can do it. You don't need me. You don't need anybody else. You need a process, right? That's all you need is a process. Grab a 10K. If you have the applied level and you want to say, well, listen, how do I save 2-3 weeks of research? I already have some videos up that go into electric utilities, that go into gold mining, into copper mining. That brings you part of the way there. You are the architect of your own future, man. You are the architect, but it requires action. It requires work. I really wish that I could help these IM people somehow and say, listen, there is a path out of this, but It's not this way. It's not what you're doing. It boggles the mind, doesn't it? I mean, when you think about it, that something that offers you nothing, absolutely nothing, can be so successful. But things that offer you the world struggle. Entertainment is a huge business. People spend hours a day entertaining themselves, but education, which is the pathway to success, probabilistically speaking, you're going to get further by spending 20 hours learning finance than you will binge watching something on Netflix for 20 hours, probabilistically speaking. But people will only spend minutes a day educating themselves. I think Nietzsche was right when he described the 3 stages of man. The first one being the camel is that most people are camels. They burden themselves with the way the world. I am losing my eloquence on this one, but they just burden themselves with the world, and they never actually shed it behind. They never actually go to the next level. They just follow along. They're just pack animals that just follow along. I don't know. Is it? I asked this question to Naomi, to see maybe somebody with a younger age, if they could figure it out. But how do you turn self-reliance, self-responsibility, the power of your own actions and education into a cult? How do you do that? Cults are based on how everything is easy. You just follow along and things are going to be easy. And it's based on making you think you're part of a family, you're part of something. But how do you build a cult where you're not part of a family? You are an individual. You are the cult of yourself. How do you turn that into a cult? Because if you can change the world for the better. If you can create a cult where everyone in the cult is a cult unto themselves. Maybe you have to have a course on how to become a cult. I don't know. But sorry for the diatribe there. I think your question was pretty straightforward. How do you find winners? It's just work, reading, thinking, reflecting, and the more you know about different parts of the economy, the more things start to fit together. Where do you see TLT at the end of the year? We say 3 rate cuts. What would that look like? I don't know. My thinking is, given the fiscal irresponsibility of politicians, given the high probability that Trump is going to win and probably institute tax cuts, or at least extend the Trump tax cuts, and the deficit will get worse, which means the debt will get worse, which means the interest cost and the burden will get worse, and he will demand lower interest rates, or he will replace Powell. He did it last time. He'll do it again. That as much as the central bank likes to think, well, we're on hold for a while, it's like, till Trump shows up. You're on hold till Trump shows up, and I think you know that. Once he shows up, you know what he's like. He'll demand lower rates, and if he doesn't get lower rates, he'll replace them. So if Biden wins, the deficit will increase, the debt will increase, the interest cost will increase. There'll be no choice but to lower rates just because of the debt burden. If Trump wins, he'll force them to lower rates. Either way, it's going to be fiscal irresponsibility and lower rates. That's my thinking. You're on the ball with ABR. It did go down to between 13.50. Where do you see it going next? I don't know. I did talk about it in the market outlook. Its book value per share is 13.06. The only question is, does the market think it justifies a premium or a discount? Multifamily bridge loans. We know the multifamily sector is challenged. ABR says as much. They're not denying it. They're saying, yeah, but we're managing through it. If interest rates start going down, once you get the 10-year below 4%, things become easier for their clients. So you can make the argument that, well, maybe they should be trading at a discount. Maybe they should be trading in around their book value or at a premium, but certainly not a big premium, which is why I think 13 to 13.50 is fairly valued. I don't think I would re-add onto my position at a fairly valued stock. I think I will get an opportunity to add it under $13. It's just a matter of when. I don't know when. I have patience. I'll close out my $15 call because it's dangerous having short calls out. So you don't want to get too greedy. I'll probably close it out if I can get 15 cents. I put in a bid for 15 all last week, and it stayed between 20 and 25 cents. The bid to the ask, 20 to 30, 20 to 25. But, you got to push down to 13.10, 13.05. I think it'll print 15. And the 14s, I'll close out at 20 cents. I think it's sitting somewhere between 40 and 50 cents right now. I see 12.70. I'll probably re-add my position, which is a nice pickup from where I sold it. Would be a nice pickup in value. I can add, for the same dollar amount, I can add even more shares. So it'd be like getting shares for free on that. And being that my original purchase price was so low, it was nice. Yeah, I would add to it. I think it hangs out here for a while. If it runs up to 14.50 again, I'd have to kind of understand why it's doing that. And if it's on no news, other than just, more short covering fear going on, I'd probably sell more calls. Pushes down to 13, maybe I'll sell puts first before I buy stuff. I don't know. It from day to day, it's a matter of, I have ranges of which I'd like to see, but if you have a price like, well, 12.70, I'll add. If it gets to 12.70 on Tuesday by noon, it's like, well, it's a little quick. What got it to 12.70? It's because what gets it there may change your mind. You may say, whoa, I didn't know that. That's incrementally new news. I'll back off. But for the most part, I think under 13 I'll add, and I'll just hold my short calls for now. I assume no applied series Q&A today. Oh, I should have told IT to take that down. I've started answering the questions on under the comment section. It's easier to do it that way. So if you do have questions, just leave a question in the comment section under every video. I'll answer them there. But I have been answering them as they've been showing up. But the live sessions weren't really working that well. You'd get 10 or 12 people showing up, and it never really climbed from there. So it's either nobody really wanted it, or it was just inconvenient on the Sunday. I think it's more convenient just to answer questions under the videos. I think that's just more convenient. With where I'm going with this, I seem to think that answering the questions under the videos make sense. As much as I didn't want to when I first started this, I think some question banks for some of the sector studies are in order. So sometime this fall, I might be adding some to that. But yeah, let's leave it all online. We'll do the answers under the videos. I mean, in the comment section. As the political situation deteriorates and more countries are allocating significant portions of GDP towards arms manufacturing, do you have a bullish view of major weapons manufacturers? Yeah, there is a push to increase spending the 2% of GDP onto spending. Something I don't know much about is the defense industry, so I couldn't really pick a winner. I don't know much about it. TLT is that has premium that's too low. Why not then play TMF? Because I don't like those three. Any of those levered ETFs are daily levered. They're daily, only daily. So if you're up 5%, down, up 5, up, down, up, 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 if you're doing that kind of thing, those triple ETFs will walk their way to zero. You will simply just lose money over time. I don't like levered. If I want leverage, I'll use options. I got 10 times leverage there. I'll use options. Or if I really want to lever up, I'll use bond futures. Why would I go into a daily levered ETF? Bond futures are cheaper. Bond futures require less capital, and I have huge leverage with that 50 times leverage. So three is almost childish when you think about the leverage you can get in options and in futures. Why does passive investing always win over active in the long term? Because it's hard to overcome the fees. In many markets, once you start getting portfolios of stocks, portfolios tend to be very efficient. Individual stocks can be inefficient, but portfolios tend to be very efficient. So it is hard to beat a passive index over time because active trading means that you have to pick those things in the index that will do better than the index. It's a tough game to play consistently over time. Not that it can't be done, but it's a tough game to play. Use a stock screener to pick a stock once you're bullish on a sector? No, I look at the ETF for the sector. I look at the 2 or 3 big players, and I usually stick with that. Will you ever come up with your own finance designation? Yeah, I think sector specialist makes a lot of sense. Is to continue to expand out the sector studies, and then to begin to actually write out the material. For that, I would need a writer. I'd probably hire a writer to get that done. Somebody who has a track record of good academic writing. And then I think something like a sector specialist makes a lot of sense. Anything like that would still be 2 to 3 years off because it does take time to build out that curriculum. But yeah, I would think about it. I'd think about it as if there was a level 4 to CFA, what would it look like if it were purely applied? None of this textbook stuff, but real stuff in the market, where your case studies are real live company 10Ks in each of the sectors. That there's one example in each of the sectors for a 10K, and that is your case study. And all your exam questions are built around the understanding of that 10K. What would level 4 CFA look like if it stepped into the real world? That's what the sector studies, I think, is going to be. Would you also do videos for the applied series on operational management, since the CFA is more outside in versus inside out? For operational management, I do have a video series for management accounting. If you really want to understand the operations of a company, understand management accounting. That is how, well, it's called management accounting. And that is how management accounts for things internally. You have financial accounting is how they report to the world what they've done. Management accounting is about making decisions, and where and how you would make decisions based on the numbers you're getting inside, stuff that we would never see. But to understand how decisions are made, management accounting, I think, is the best to understand. Same with corporate finance. To understand how companies make more of their financing decisions, corporate finance is very good. CFA does offer that. You do have level 1 and level 2 corporate finance, but now they call it corporate issuers. But I think if you layer on management accounting, I think you can get a better understanding of how companies do make decisions. Ben Felix has a video about renting versus owning. He compared rent to the unrecoverable cost of owning a home, interest, taxes, repairs, rather than the mortgage payment. Well, I mean, when you say the unrecoverable costs of owning a home, your apartment will provide you no capital gain ever. Okay. There are costs to owning a home. There are costs of carry. So the principal payment you make, you can consider that savings because you are buying an asset. Everything else is a cost. I think what you have to do when you buy a house is you have to say, look, I pay $2,000 rent here, which is unrecoverable. So the first $2,000 that are unrecoverable of my house, as far as incremental cash flows, I'm just going to eliminate it. So the principal payment I make is my savings. That I'm not going to count because that's savings. I pay rent for $2,000. The first $2,000 I'm going to ignore. Anything extra is the amount that you pay for a call option on the value of the house increasing. You do not have a call option on your apartment at all. You just keep paying. There is no capital gain to come out of your apartment, but there is the potential of capital gain to come out of your house. An apartment is not a hedge against inflation. Your rent will rise at the rate of inflation. It'll rise 2, 3, 4% per year. But your house will also rise with the rate of inflation. So you have a hedge against inflation. So it's if you're just looking at these numbers versus these numbers, I spend this much, but you'll spend this much on a house, it's not worth it, is missing the fact that once you control for that portion of the house that's called unrecoverable, and you say, well, rent is $2,000, so $2,000, that's a wash. The equity is a savings. The rest is what the call option costs me for the capital gain on this house in the future. Did he do that? Did he value the unrecoverable amount as the price of a call option? And did he value that call option? Because that call option could be really, really cheap. It could be a really cheap call option. If he didn't do that, then it's an incomplete analysis. Is there any metal that can be used as an alternative to copper? Aluminum, but it's heavier. I shouldn't say heavy. You need thicker wires to send the same signal. It's slower and it heats up. So it's not as good as copper. But you can use aluminum. It's just not as good. Copper is still the best. Would you describe what having an edge means to you? It depends. If you're in a room of really smart people, having an edge is knowing something they don't know, which means you have some information that these people don't know. If you're in a room of average people, having an edge means you can process information better than those people can. So you don't need to have information that they don't have. You just need to know how to process it better. So perhaps we all have the same information, but they just have no clue what to do with the information. But if you're in a room of people like you and you all have the same information, you have to go on the basis that they know how to process that information as well as you do. So you better know something they don't. So having an edge, you tell me what room I'm in, you tell me what people I'm around, and I'll tell you what an edge would mean to me. Sometimes an edge is nothing more than being the smartest person in the room, or being the person in the room that people defer to the most. Again, you give me the situation and I'll tell you what an edge is. What's your take on AMD? What would they should do? Compete with NVIDIA? Who would be the closest competitor to NVIDIA? Why compete with NVIDIA? I mean, why face them head on? They are ahead in that game. That is their space. You don't have to be the best to be successful. Let's say that there's two data centers, or let's say there's a data center with two-tiered pricing. One tier, they're going to train your LLM on NVIDIA chips, but heck, those things cost money. But they can train your model in 7 days, and it'll cost this much. But we also have this other tier. It's less expensive because the chips cost us less, but it'll train your model in 14 days. And you think, 7 days, 14 days? What do I care about another 7 days? I might be willing to take the lower tiered pricing because the investment was much lower. Why compete with NVIDIA? Why not just open up a space below them and be the low cost provider for companies that say, what do I care about 7 days? Train my model in 7 days or train my model in 11 days. What do I care about those days if I can get it done at 40% of the cost, right? So I don't know that you need to actually compete with NVIDIA on that as much as open up another space, open up another alternative. You have money rushing into VC funded companies, trying to buy as many of these, as many credits on these systems as they possibly can. Well, what if you could say, look, okay, you want to train your model, they can do it in 21 days, we'd take 32, but it'll cost you 40 cents on the dollar. What do you think? Why compete with them? I think it's a fool's game to try to catch up with the leader that way. Live in their wake. Just live in their wake, because they will price out a whole bunch of companies that can't afford it. So live in their wake. What's one advice that sticks with you during hard times, lazy days? I don't know if it's advice as much as it's a way of thinking. Is that and it's based, again, a lot of stuff that I've internalized is based on the philosophy of existentialism, and primarily Nietzsche. And he describes a situation in which it's called The Last Man, in which you avoid all kinds of hardship. You try to avoid it as much as you possibly can. And you end up being this pathetic shell of a human being, incapable of doing anything. And Dostoevsky's Underground Man is really modeled on this last man idea of being just this pathetic person, incapable of anything. That what makes you in life is the suffering that you go through. Now, Nietzsche didn't say you should needlessly seek out suffering, but that when confronted with hard work, you should take it, because it does make you. What doesn't kill me makes me stronger. So when I'm faced with tough outcomes or a tough situation, you can look at it as, I want to run away from this. I want it solved. I want it to go away. Or you could look at it as an opportunity to say, I can beat this. I can handle this. I can destroy this, and I can get better from it. And it turns it into sort of a personal growth opportunity that, if you can see it that way, it helps. Nobody wants struggle. Nobody really says, I want to wake up today and have the hardest time at everything, but life will throw it at you. It will throw it at you. So it's a matter of what are you going to do about it? And you can't control what life throws at you, but you can control what you do about it. As I said with the quote earlier, your job is to determine what to do with the things that have been done to you. As Nietzsche tells us, is that the making of a man, or the making of a person, we'll be more gender neutral on this one, the making of a person is the willingness to accept those challenges and not shy away from them. So I'd say that is what sticks with me during hard times. Is give yourself challenges. Nobody else will. So walk the extra mile that day. Run 30 seconds faster for the 5-mile race, for the 5-mile jog you do in the morning. Like, push yourself, give yourself these challenges. Very, very few people will. Very few people will. And when you start doing that, you will find that the world you live in becomes less and less and less crowded. Because the world, for the most part, is full. Once you start on this pathway of deciding that you are the architect of your own future, You are at any point the sum total of all decisions you've ever made. Once you start benchmarking yourself against what you were yesterday and you continually strive to improve, you will look at the world differently. What you will see, for the most part, almost everywhere you look, is average people doing average things. And where you play becomes uncrowded. I think I can say that with the accomplishments that I've had, is that I do see that, almost on a daily basis. I do see that is, I the way I approach things, the way I push myself is I can't imagine not doing it that way. I can't imagine drifting into complacency and drifting into averageness. I don't know if there's any bigger insult in the world than to call me average. I think that I would be most insulted on that. He's average. Tell me that I dress average. I'm okay with that, but don't tell me I'm average. I think that to me seems like one of the biggest insults. Where'd we leave off? There used to be an onion futures market. Congress banned them after Vincent cornered the market. That's a story I got to figure out. An onions futures market, and it was so critical, Congress banned the onion futures market. I got to read up on that. That's crazy. Do you think it would be helpful to read more digestible areas of CFA level 1 before actually signing up for the exam? Yeah, I mean, give it a try, see if you like it, such as ethics. First of all, ethics is boring. I'll tell you that straight up. You're not going to get much out of finance by starting with ethics. I wouldn't even start with ethics. You're just not going to get very much starting there. Start with fixed income or start with equity. Jump right into the asset classes. Ignore quant, ignore that stuff. Just jump right into the asset classes and see where you go from there. And equities and bonds are the two big ones. So jump into fixed income and equities and see if you like it. But I wouldn't start with ethics. We want to keep you in the game, not scare you away. Fundamental analysis and its relevance in the future. I think there is only one type of analysis, and that's fundamental analysis. I'm not a big fan of technical analysis at all. If you watch the market outlook, I did a fundamental analysis of copper. Something that has no income statement or balance sheet does not mean it doesn't have fundamental data. And if you go through the section that I did, I show you where the premium turned negative in China and what happened to the contract for COMEX, because now world copper is going to be redirected towards the US instead of China, because you're not going to take a discount to market. You'll send it to the US. That's a fundamental analysis. Fundamental is not dead by a long shot. I think technical should have been dead a long time ago, but here we are. Do you get asked to go on business channels like CNBC or Bloomberg? No. Actually, CNBC, was it? It was no. It was the Canadian version, BNN Bloomberg, years ago. And I went up to Toronto and we did a few things. And I think they aired a couple. It was more education spots. They aired a couple, and it was, I didn't like the way it was done, and it didn't go anywhere. But as far as a guest, no, and I don't think I would want to be. I don't think I would want to be. If not, is that something you would consider as a way to get exposure for your business? No, that's not my thing. Any suggested pathway to start learning about commodities, specifically mining industry and metals? In the applied level, sector studies, yeah, there's understanding mining, and I use copper mining as a start, then understanding gold mining. I do a walkthrough of Newmont and a walkthrough of Freeport. That would be a good place to start. If a country GDP is 8.4, companies like consumer sector, infrastructure, etc., doesn't see growth of even 8% in revenue. What is wrong with this scenario? Well, just because GDP is 8.4 doesn't mean everything grows at 8.4. If you, the consumer, let's say consumer sector is not growing at 8.4, it just could be that there's massive government spending. And that government spending could be on military buildup. It could be on massive social programs. It doesn't have to, every sector doesn't, every component of GDP doesn't have to grow at 8.4%. What do you think of TD? Is there more to, that's the other one. I was looking at selling puts on TD last week. What was the latest? TD fired a whole bunch of people that were involved in that money laundering thing. That's not going to absolve them of a fine. There will be some fine, but I don't know that it threatens the franchise at all. So other than an event, I'm not reading a trend in that. So weakness could be a buying opportunity. ChatGPT is expected to make $5 billion in 2024. Top 4 semis are worth $4.16 trillion. Mag 7 is doing dividends now, and enormous capex is a 5.3 risk-free environment. So tempted to short. I would not. Do you perform a complete 10-year valuation comparison? No, I do not. I don't do that at all. People who would rather be lied to than told the truth. Yeah. I think I don't know that they would rather be lied to. I think they just want to hear. They just want to hear what they want to hear. They don't want to hear truth. They want to hear that they're right. I think there's comfort in hearing that something is not your fault and that we've got all the answers for you and that you've just got to come along. I mean, that's the whole basis of religion, right? Is that we have all the answers for you. We are the light in the darkness. I just, is there a way? I mean, people, I don't know that they want to be lied to. I think they just want to be told what they believe. That's my dilemma. And that's sort of what I'm thinking. Is there a way to turn truth into a cult? Is there a way to turn, think about it in terms of the light versus the dark, right? This is the dark side. Is there a way to turn the light side of the force into a cult? Where it is about what you can make of yourself. And maybe you just need a pathway of understanding that you have so much power. But when you go into these cults, you give up your power, you give up control over yourself. And once you give up power and you give up control over yourself, that is a surefire path to unhappiness. Because the most unhappiest people in the world are those who feel they have no power, are those who feel they have no control. And what happens is that ends up showing up in the most perverse way, because you have no control in your life. So you're going to find something to control. And it's usually something petty and small that you feel you have this small little bit of power over, and it's all you have. And by God, you're going to control that. And you end up becoming bitter and petty because of it. But if you could then think about, well, what would it mean if I had full control of everything, even in something of which you may have no control over? Think about saying this: you have a job that you don't like. Some people will tell you, but you do have a choice. You don't have to stay there. You can quit. You always have a choice. It's not really a good choice, though. You could say, sure, I can quit, but it's not really a good choice. So what you can say is that rather than saying, well, I have no choice, you can say, I do have a choice. It's just not a good one, so I choose to stay. Just the simple act of saying that, I do have a choice. It's just not a good one, so I choose to stay means you are in control of that decision. In your mind, you are in control. You have power over yourself. You chose to stay in that job. You didn't wake up every day going, I have no choice. When you say that, you give up your power, you give up control. That is a road to bitterness, a road to unhappiness. So just if, for these people who were so eager to believe, so eager to get some part of that dream, I wish there was some way we could turn that thing into a cult where they then start to subscribe to that, and that's free. That doesn't cost you $200-300 a month. But I can understand how some people would need a guide in that, because it's like, well, how do I even conceive of that idea until you said it? How could I even conceive of it? I said this last week, that if I had some kind of problem in life and I had a choice between sitting in front of a renowned psychiatrist or a philosopher, I'd choose the philosopher any time of day. I'd choose the philosopher. I think what these people need is more philosophy in their life. And maybe that's the cult. I don't know. I can't get it out of my head, though. I mean, I keep thinking about it, going, how is it possible that so many people fell into this? How is that possible? Let's see. Bullish on HG copper as you are. Well, I'd be careful on HG. I think copper prices are going to be soft for a while. I think you're going to see inventories build at COMEX. Copper's a longer term play. Over $5. I wasn't comfortable with that. And if you go back to earlier market outlooks, I did say that it just doesn't seem, this is not the way copper moves. This doesn't seem right. I do think it'll be soft for a while. I wouldn't look for a $5 or $6 copper at this point. If it were me, I would not be long HG. The mining companies, I would be. What other investing instruments would you look into? Adding that I am looking at holding 1 to 3 years. Well, HG is a futures contract. You'll be rolling that every 3 months. So, and being long HG at these interest rates, the negative carry could bury you in a couple of quarters. At least with Freeport and Newmont, you have a dividend and you have the ability to play the options. HG is a big contract, 25,000 pounds. Every dollar is 25 grand. We're 470, 475. It wouldn't surprise me if we saw 415, 420 again. I don't know if Globex is live tonight. The US is closed tomorrow. Let's see if we got anything on Globex on HG. Where are we? We'll look at let's look at the June contract. 475.95, up a penny. Yeah, it's not really, and it's been, even though it's up, it opened higher. Opened at 477.15 down to 475.95, still under selling pressure. So I'd be careful there about HG. I think it'll be soft for a while. That's why I would look more to the miners. Can the average CFA really pick winners? Yes. The data seems to suggest even the most educated, experienced, active managers cannot outperform. Okay, let's put that in perspective when we say outperform for a moment now. We're talking about portfolios. Okay, when we say the average asset manager fails to outperform, we're talking about portfolio managers. That means that they have a mandate. It may be small cap growth, small cap value, mid cap, large cap, international, whatever the case is, they have a mandate, large cap blend. Okay, so you're the S&P 500. And when we say outperform, what we're saying is that, look, I got a choice. I can just buy the S&P 500. I can buy SPY and I'm done. What do I need you for? And your argument to me is that, but I can pick the winners in the S&P better. I can do better than the S&P. So when we say that you can do better than the S&P, we're not saying that you're just all over the place doing whatever the hell you want. It means your mandate is large cap blend, not small cap, not commodities, not currencies, not Bitcoin, not copper, these 503 companies. And you must invest in these companies in a way that does better than the current weighting of those companies can do. Brutally hard to do. But hedge fund managers, they have no mandate. They can be anywhere they want. So when we talk about active management in equities, we're really talking about traditional assets, meaning equities. Hedge funds are more of an alternative investment, more of an alternative strategy, so they fall under alternatives. So when we say managers underperform their benchmarks, we are not counting hedge fund managers. Hedge fund managers have no benchmark. They have an absolute benchmark. So we're not counting them. So it is absolutely possible to beat the S&P 500 if I am not restricted to the S&P 500. So when I get asked, did you beat the market last year? What market? I'm not restricted in anything I do. I don't have a mandate, so it's the wrong question to ask me. The right question to ask me is, did you beat a hurdle rate? So my hurdle rate might be a cash rate plus 500 basis points. So in other words, it would be 10.5%. If I take on more risk, it might be the cash rate plus 800 basis points, which means I have to beat 13.5%. But to say that I beat the S&P, to make it a fair fight, is that I would have to be playing the S&P and nothing but. So active management, meaning that I am going to beat this benchmark. My mandate is large cap growth. This is the benchmark you've given me. I got to do better than that. Brutally, brutally hard. But if you say free reign, buy and sell whatever you want. You can go long, you can go short, you can use futures, you can use options, you can use leverage, currencies, commodities, whatever you want, go for it. That's a hedge fund. That is an unconstrained fund. Yes, that's where you can play. That is closer to what I do than saying the S&P 500 is my benchmark. It no way even looks like my benchmark. So yeah, you can beat the S&P if you are unconstrained from the S&P, which means you do not have to invest in just the S&P. All right, we're going to finish up here soon. We've been going 2 hours and 22 minutes, so I'm going to scroll to the very bottom and read upwards. Is there a minimum portfolio size one should have before getting into options? I've been thinking about selling puts on stocks, and I want to buy at prices I would be comfortable with. Are there any further considerations to make other than do I have the cash for this? Yeah, well, that would be the first one, is if you cannot have the stock put to you, you're not going to do as well. Because part of doing well in this is selling puts on stocks you don't mind being put to you. When they're put to you, you're generating an income from the stock because it has a dividend, and you can sell calls against it if you don't really want to own it, if it's put to you. But if you cannot have it put to you, all you can do is take a loss on the puts. See what I mean? All you can do is take a loss there. So having the ability to have it put to you allows you to flow into the next strategy. You're rolling with the punches at that point. So if you can't have it put to you, that's a problem. So you want to limit yourself to selling puts on things that you can afford. And part of having a small portfolio is not just what is your strategy for investing, what's your contribution plan to get your assets under management higher. You have to have some kind of contribution plan as time goes by. At my job, someone wrote the following: it's easier to fool people than to convince them that they have been fooled. Yeah, that's true. The whole cult thing and your thoughts on it reminded me of it. Yeah. Yeah, it is easier to fool people than to convince them that they have been fooled. That's a good one. Curious what you think about nuclear energy's place in the coming tech build out. I don't have an opinion on nuclear at this point. I work for TD and wouldn't buy even though I have an ESOP. Oh, I don't know why not. Don't you get it at 50%? I mean, it just would make sense if the company's paying the other 50%. We launder money, even if it's accidental, we do. Well, I think all banks do. Maybe you guys just got caught. Is the market just waiting for the un-inversion to start selling off? I don't think that would be. Well, here it comes down to this: what causes the un-inversion, right? If it's a flight to safety and something broke somewhere, then yeah, the market's going to sell off. The curve will uninvert because the Fed's going to drop rates very quickly. It's a matter of what causes it to uninvert. If the long end of the curve just simply goes up and 10-year yields go to 5.5%, 6%, it will break something. The market would probably sell off. The only way for it to uninvert now is for the short end of the curve to go down at a nice slow pace, get that soft landing. But you need the Fed to start cutting rates when things are not broken. The longer they wait, the harder that gets, I think. Sometimes there is beauty in the struggle and ugliness in the success only after you've completed it. I do hills around here. So I go for a walk because I'm in a mountain area and there are hills. Like there are hills, sometimes long hills up the side of a mountain. If you've ever, done hills, whether you run or whatever the case is, hills will wear you down. So I get out there with all this energy in the morning and I do small hill, I do a medium hill, then at the very end, I do a big hill. Halfway up that hill, I question what the hell I'm even doing. Why am I doing this? Why am I doing this? And you're halfway up the hill and you're looking up, you're going, I'm never going to get there. What am I doing? And you finally get to the top of the hill and it's all beautiful after. But in the struggle, you wonder, what the hell am I doing? It's only beauty when you get done. And then you get your breath, you're walking for a while, you think, I can do it again. Let's do it. You want to do it again, but you think, no, because if I get halfway up that hill, I'll be cursing myself. What the hell is your problem? You had a choice. Why did you do this? I think you got a point. After it's over, the victory is fantastic. But in the middle of it, it's just like, what am I doing? How exactly does short covering work for copper contracts? Have they sold the copper for but couldn't? So you're short, and you have a choice. The price is going up, and you can say, well, I can secure some supply of copper now, so that no matter how high it goes, I'm good, and then I could just deliver, so that I don't have to cover the contract, because the cover means you got to buy copper, right? And somebody else has to sell it, and if it keeps going up, you keep getting that. Those who sold then have to buy. So whenever you have these big run-ups, this volatility like this at the top, especially in something like a copper contract, that is not fundamentals. That is something else going on. Usually you see those kind of spikes if you're watching the pace of the roll and there's a number of contracts or a number of people who left it to the last minute to roll their contracts forward, then you'll see that little spike up right at the very end. So it's important on CME to watch the pace of the roll so that you can, if you're rolling, you roll in the fat. There's a curve that drops that you can roll in the fat part of the curve when everyone else is rolling. But to see these spikes up like that, something's going on. I see there's a technical analysis section behind a paywall on the MM site now. Is this something you put together? Technical. There's CFA and there's FRM. I mean, I did a little bit on technical analysis in the applied level, and I don't know what folder that it's in. And I gave up on it just because I got a little bit ways of the ways through, and I just thought in my head, this is such horseshit. Because I was trying to do I figured I'd put the curriculum for CMT up, Chartered Market Technician, and I was doing the level 1, and I think I got to the 8th reading, and I just stopped because I thought, this is such horseshit. I cannot do this. This is horseshit. It's such horseshit that I just stopped. So maybe that's what you're looking at. There's nothing there. There's really nothing there. Working in retail banking right now, and I hate it. Should I quit work to finish my degree? I only have a year and a half left. I want a more stimulating job. Retail, that is a tough side to be on, is retail. Opening accounts and getting debit cards, and my God, the paperwork. You open one account, it's like 50 pages that you got to print out, sign here, sign this, sign that, specimen card here, let me get your cards. You know, retail, I can see that you would hate it. If you sacrificed your degree for this and you don't like it, then it's a dead end for you. Then yeah, you should think about your degree. You should think about it. If you are faced with the economic reality of life, it might be difficult for you to quit your job, in which case I would investigate what the bank has to support your continuing education, and maybe they'll pay your tuition and you have to just find courses to take at certain times. Maybe they'll support it, in which case you may hate your job, but at least it pays the rent, it pays the bills, and they're paying your tuition. See if it offers that. Not only that, just ask them, look, is there a pathway out of retail, at least into the commercial side, or at least into something else, or am I just pigeonholed here? And if it's like, no, this is all it's going to be, and we don't support any education, then at that point you have to say, well, am I going to be here 15 years from now wearing a Sears t-shirt and a cheap tie, or am I going to move, right? A couple more and we'll end it here. Concerned Canadian because GDP per capita is dropping. Yes, it is. National debt is accelerating. Yes, it is. Productivity is declining. And productivity is always sucked in Canada. What does Canada need to do to turn around these unfortunate trends? Stop attacking success. Number one, stop attacking success. Number two, and this just didn't seem to have a very good climate at the time, is rather than giving tax breaks to really big companies to set up factories, give tax breaks to anybody who wants to invest and open a business and hire people. Why just the big companies? Why can't I get a tax break? What's wrong with me? Right? Is rather than continually punish success, start rewarding success. This increase in the capital gains inclusion rate is the most boneheaded thing I've ever seen. Because what it will do is we'll say, well, I can start building a business in Canada, or I can build it in the US. If I build it in Canada, it's got a higher capital gains inclusion rate, and I do plan to sell it at some point. Thank you. I'll go to the US, and they will have my gratitude. They will have my tax base. They will have my employment. It's a boneheaded decision only a liberal could make. Well, I shouldn't say only a liberal. Only a phony liberal could make. Only an uneducated person can make. Imagine that we had a prime minister in Canada who was, let's take some, I don't know, part-time drama teacher or something like that, and made them prime minister. That's what you would expect. That is what we have, don't we? Well, there you go. It's a boneheaded decision. You need a pro-business government, and a pro-business government, you're going to have to understand that there's going to be wealth and income inequality in a competitive-based system, and you're going to have to live with it, because the question is not, is there inequality? The question is the inequality fair? And in a place like Canada, the inequality is fair. You have to reward successful people, not punish them. I don't see that happening under a Trudeau-Singh government. I don't see that happening. So good luck with that. How did you know there was overcapacity of copper smelters in China 2 months ago? Any data sources? They told you. They basically told you in March. What was it? March, third week of March, March 22nd, March 23rd. That was a headline out of China, is a number of smelters were shutting down because of overcapacity. They were producing too much copper and there wasn't a market for it. Inventories were building. So they shut down. And that's when copper went from $3.95 to $4.10. It ran all the way to $4.30. And after that, I had put a video out saying, listen, I think this is overdone on the closing of the smelters. It's overdone because it was overcapacity to begin with. It's not like they're taking needed capacity off the market. I think selling calls on FCX at either $47.50 or $50 makes sense. Didn't work out. I mean, I got paid for the 50s, but got called away. I've now sold the 47s, the 47 puts. I think I'll have a chance to sell more. But they basically told you that they were shutting down. That was, that's what started the copper rally. And then it just kept going from that. And then the headlines coming out saying, oh, there'll be a shortage of copper in this many years and this many years. And then that just took a hold. And I thought, yeah, there'll be a shortage of copper in a couple of years. Not today. It's not today. This is just felt like a little too much. And it was. One more and I'll go. How's that? I think a quote that captures that sentiment is, character is forged in the fires of adversity, not in the waters of tranquility. Ah, there you go. Beautiful one. Not a question, but I think you mentioned something about Python module for the applied series a time ago. Any update about it? I don't know that it's worth doing a module because there's so many free sources on YouTube that are very, very good, that I don't know that I could replicate what's already out there. So I think the best thing to do is for me to curate a good series on Python that's on YouTube and just put the links for that in the applied series somewhere and let somebody else teach it, because there's so many good sources that do it for free. Why redo the same movie again when it's already been done fairly well? So I don't think that I would do it myself. If you want a good book, though, Dietel, Dietel, the author, the company used to be called Dietel and Dietel. Now it's only Dietel. I wonder if Dietel killed the other Dietel, or if the other Dietel, or maybe the Dietels got divorced and there's only one Dietel now. Or maybe they just thought it's kind of repetitive, Dietel and Dietel. Why not just say Dietel? Anyways, the Dietel book is really good. It's a funny name when you say it that many times. Dietel, Dietel, Dietel. Anyways, let's call it a day here. 2 hours and 36 minutes, 8:06. I got to go shut the glass door downstairs before the frogs hop inside. The joys of a jungle country. That's it. Tomorrow's a holiday, and we have a shortened week. Be good. I'm going to click end stream now. Ciao.